After falling from 30 to 24 in the second quarter of 2010, we saw the F&B Building Confidence Index bouncing back to 29 in the third quarter of this year. With me to unpack these numbers further, Cees Bruggemans, Chief Economist at F&B. Cees, thank you so much for your time. So we're sitting at 29. We have also seen an ultimate low of around 11 points. So we're far from that, but we're also far from the high that we saw around 80, which was reached during the good periods of 2005 and 2007. And many say, when you look at the real estate sector and you look at the building sector, that we will not reach those highs once again. What are we looking at this point?
At this point in time, specifically in the building side, I think we're probably still exploring a downside. So we may not actually have seen the lowest level when it comes to the building contractors for both residential and non-residential. Both these sectors are indicating a more optimistic view as to what the next quarter will bring. They did it in the previous quarter and they're doing it again now. And on the basis of that, I think they're indicating a slight uptick in confidence. Yet the reality, when the actual activity levels come through, we find that activity levels continue to fall at a very rapid pace. So we tend to feel that the index will actually still decline where it concerns contractors. Yeah. However, we do the entire pipeline, so it includes architects and quantity surveyors, but also importantly suppliers of building materials, manufacturers and retailers. And especially on the manufacturing and the retailing side, that confidence has picked up. I think especially the additions and alterations side of things has probably improved.
Okay, so it's interesting you mentioned the pipeline projects and you've been looking at various sectors of the construction environment, and we have been seeing a lot of these construction companies out with results. They are concerned about pipeline projects. They say that it's still very bleak and they're not really sure what is going to come to the fore. Just looking at the way that the residential building activity and how that contracted even more so than the second quarter of 2010, it seems that perhaps confidence and what we've been seeing on the ground is not really going in the same path. We're seeing confidence ticking up and perhaps things are not really happening quick enough on the ground.
Exactly, and I think also the interest rate cycle is already nearly 2 years old now, the downswing, and people are reasonable to assume a normal cycle, but this is probably not a normal cycle. The downswing in the building industry will probably last longer.
Well, taking a look at the non-residential sector, how do you think the demand-supply scenario is going to play out going forward? Do you think it's going to be better? No,
this will take at least another 12 to 18 months in terms of being oversupplied at this point.
Look, you mentioned the interest rate scenario that is playing out. MPC meeting kicking off today. Many are hoping for 50 basis point cuts. Others are looking at 100 basis points. When you look at these building stats, perhaps we do need another interest rate cut. Do you think that's going to be great impetus to push building further?
I do think the Reserve Bank looks wider than just this particular industry. Certainly this is the industry that needs it most. And of course the broader household sector in terms of its debt deleveraging that is still going on. The economy generally, I think, is performing growth-wise in line with what the Reserve Bank would have been hoping for, if I think back over the last 2-3 months. But given all the evidence, yes, everybody seems to be convinced that they are in the market for a further interest rate cut tomorrow.
Well, Cees, looking at what we've been seeing from a consumer spending perspective, we've also got strong wage negotiations that are ongoing now, and that could be a hamper to the positive inflation scenario that has been playing out. How do you think the Reserve Bank is going to weigh up these issues? Because there are very strong issues, perhaps pointing to the fact that we shouldn't be seeing a cut.
By all means, except that the economy, of course, is still at a very low level of activity, and especially in the manufacturing area, for example. So there is scope at this point in time for expansion. And although the wage increases are high that are being negotiated, at least union-driven, one must allow for substantial further employment reduction and very large productivity gains. The ultimate wage bill, I don't think in the system is necessarily growing by the extent to which you would think just going by the union settlements. So yes, the economy is recovering, income is recovering, spending by the household sector is recovering, but it is not yet at a level where I think it would have an inflationary effect and where it would make the Reserve Bank cautious. So I don't think that is a major factor at this point.
And of course we've got the strong rand. We're not really importing inflation when it comes to oil prices and various other commodities as well. So that could also be a key reason as to why we should be seeing a cut.
If anything, the inflation is surprising on the downside and will do so for the next few months, at least in terms of the data that we know. But also going out over a year or two, the trajectory of the inflation rate and Governor markets very much emphasized last week, they're looking forward rather than at the current numbers. I would say, given the currency, given international developments, there is reason to believe that our inflation rate will undershoot most people's expectations.
Well, looking at what the Director General of the Treasury has also been saying, to not tax portfolio inflows because this is going to assist us in paying, and bringing down our deficits in the country. What is your view on that comment?
I fully agree with it.
Well, taking a look at the strong rand, where do you see the rand from these levels onwards?
Stronger.
Stronger? What level?
I have no idea, but stronger. The Reserve Bank, of course, has started to intervene. But my expectation is that that will not change the ultimate reality, and for that I have to look internationally. And long story short, I think we continue to be accommodated and favored by these very large capital flows. Also, I think the precious metals favor us and this global climate. So yes, the currency could go stronger.
Cees, thank you very much for your time today.